Good morning, everybody. How's everyone doing today? Hope you all had a very nice Mother's Day. You're all spending the day with your moms, hopefully. Good morning to you, Miles. I'm guessing that I'm coming through loud and clear. Hopefully. Put the micro crude up here. All right, the market's about to open. Well, quick and easy on the pound Aussie, so I'll just show it to you now. Just got to that second target, 18 pips, one and done. And in 20 seconds, the market's going to open. Good morning to you, Brett. Got a quick short. Soybeans. 1603.5, stops at 1607 and a quarter. You can see the targets there, 1601 and a quarter, 1600 and 1598 and a half. It was a fast winner, went too fast. And now soybeans is flipping over to long. So heads up, moving quickly, 1606 and a quarter. Gave you a couple moments there just to get that in there. You can see if you're going to trade something like this, it does require practice. One of the rare sessions where it didn't win on the first trade. And it just missed its target one by one tick. So there's a chance to get back in. Or to get in if you didn't get in the first time. And the YM got short. 32,386. That one targeting 32,361. There's soybeans hitting its target, first target, and stops moving up to break even. Of course, that's Counterpunch Trader in the bottom right. Heads up on the YM. The stop would be at 32,417, and our money management levels at 364. Pretty erratic trading so far since it opened a moment ago. Looked like it was going to break lower. Now, oh wow, stopping out and getting into a long trade that was too fast to handle. And soybeans is done with that trade as well. Pretty fast action this morning. Looked like the YM was going to move lower. It made new lows and then quickly turned on a dime, and now it's coming down to test those lows again. Yeah, that's pretty rough right there. Been on such a winning streak on Monday morning, so it's kind of unusual. Maybe we were due for a rough start. Of course, no chance to get short on this move down with Spotlight. We're just going to have to be patient and wait for the next setup. So again, if you're just joining us, good morning. Let me know that you could hear me loud and clearly. Hope you guys had a great weekend. Review what happened on crude oil in a little while and unleaded gas. And then I've got the micro Russell playing in the upper left corner with Catapult Trader and a custom Renko, just to give us a different look and something different to pay attention to. Another short on the YM. These shorts are coming at, well, it's flirting with these lows here, as you can see. I was at 342, 342. Let's see if it could break lower. That stop is at 391. We need to get to 305 at least to get to where we can move our stops to break even. Hasn't been able to get there yet. Keeps cracking down to these new lows. Now it's flipping over to long again. Yeah, rough session here, guys. If you're short, you may want to stay short, but be prepared to bail out. Yeah, too late. This market's pretty treacherous, as you can see. And those long trades, you can't get in them because it's just too fast. The market a chance to settle down. Let me know if anyone's in here trading the YM. Here's the micro crude. This was a case in point where the filter didn't really serve our interests. This is the filter with the crossing over of the moving averages. You wait 7 bars before you can go long as it's crossing over short, but you could see that it wasn't much of a crossover and the price was already moving up, and by the 7th bar it was over here. It was way too late. And so it filtered out a nice winning trade, and then a nice move up, which led to just getting this consolidation in here. And this was most likely too fast to catch. Seems like, I don't know. Usually when it just spikes down like that and back up, it happens in a blink of an eye. But I don't know. Let me know if anyone grabbed that. Maybe that was just a loser. Obviously the next two were also. And so then the nice trades came. But by then the mini session's over, right? 2 losses. So a little out of step and out of sync with this morning session. And which is unfortunate that it was the filter itself that usually saves us from losing trades. Change the personality of the morning from a nice strong winner to getting caught up in the pause here before it took off again, both up and down. So just bad luck how that worked out. So you can see that so far some nice extensions, some nice moves, but then the consolidation, and that's typically what gets you. Same with what we saw here. Unfortunately. Can't win them all. Unleaded, on the other hand, worked out pretty nice because there was no crossover. The 50 never did cross over that 200, just stayed above it, and that long trade came and worked out great. So Unleaded gas, the hero this morning with the one and done, hitting targets 1, 2, and 3 here, and finished within like 3 minutes. Maybe too fast. Actually, it probably was. So while it looks really nice, I'm looking at the timestamp, and I just don't think that was tradable. Unfortunately, that went too fast. So you got an adjustment here, which hopefully saves a losing trade. This one, I don't think you could avoid. So this one is probably your first trade of the day, which loses. But then you got this nice one here, which would be trade number 2, and that should save the day, hopefully. Another winner there. So let me know what you guys are trading. Soybeans again. Soybeans is a little tough this morning too because of this. Caught up in, we'll start it here. Where to start? Here, this purple trade. I mean, that was obviously would be nice to be in that, but it went way too fast. And then the green trade flipped over to long, giving a second chance to get in, and then that one zoomed up. And that target one, that's about the same distance as a stop and reverse, give or take. Probably still behind schedule here, needing another winner. This looks like a setup to go short, but it's not. Making the green trade then the next trade, and the full winner targets 1 and 2. So in 3 trades, it looks like soybeans was able to get it done. And that one a short here. But I would think after that green trade, that would be a power of quitting result. And this MQ, M2K, I should say, not NQ, but this Russell micro produces a lot of great moves. I thought it'd be fun just to watch this chart. I got the automation running on it too, but obviously it's going really fast. And again, this time early in the morning, the way the markets have been lately, you have to be very, very careful. Don't try to do too much. And you might need to pick a chart where you slow things down. Because obviously when it's moving so fast that you can't trade it. I mean, with chart trading, you can practice. I mean, this is a nice trade, nice chart to practice your executions. You set up chart trading with a little template, maybe 1 or 2 targets, and your stop. Practice placing these trades and managing them in a sim account until you get really good at executing. That's a good way to use a chart like this when you're just learning. You want to learn some new techniques. I would like to welcome some new members to Counterpunch Express. I know we had quite a few people jumping on board over the weekend, and if you're in the trade room right now, please say hello. Let me know who you are. I have no way of knowing who's with us, so sometimes I feel like I'm just talking to an empty room. But I want to help you figure stuff out, answer your questions, show you what you need to know to get you started. on the right step or wherever you are in your journey, what I could do to help you with the next step. So I guess the moral being, don't be shy. Feel free to ask whatever's on your mind, because that's the only way I could answer if I hear what your question is. Otherwise, I don't know. I see soybeans coming down and hitting another winner. Looking at NQ, the MNQ. A lot of trading happening in just a few short minutes. And it's hard to know how fast these bars are printing. Super fast. So waiting the 4 minutes like we kind of been watching on this chart. This first trade was too fast to grab, which was good because it was a loser. This one also way too fast. Let's see, that's 4 seconds in. Maybe, yeah, this one was 8 seconds in. That one was tradable. Figure if in 8 seconds you should be able to place your trade if you got your template set up right. And that one hit at least a nice target too. Just checking on the timestamp here. This one was way too fast. 1 second and this entire trade practically printed, so that's not tradable. And these charts are always fun to look at after the fact, and with patience, you maybe grab a move like this, but again, too fast, unfortunately. So even though it looks amazing, I mean, I suppose if you're using automation, you can catch a trade like that, but then you're catching these losing trades as well, and you're getting chewed up with slippage. So it's not something I would recommend. It's just, they're just not tradable. They're just way too fast. And it's just the way the markets are right now. It's not always like this, but it sure is lately. This one too. Great move, but they're too fast. So we could even, let's see how it's trading at the moment. Let's watch it and see. This one here. I mean, by the time you get to here, you're like 5 seconds in. So it's, again, you can't really grab trades like these when they set up. I don't know. Again, nice looking chart, but I don't see much use. Now, a chart that, if you want to trade the NQ, and I showed this over the weekend, I had a webinar. I could probably set it up. Let's see. Oh, 1 second. I could probably borrow this soybeans chart here. And a way to take advantage of these great moves with counterpunch and the NQ or the MNQ. Let's go back to our old time friend that we haven't looked at in a long time. This may be too fast. I want to look at this also, but the 610 tick has made for some nice trade plan. It's been on a trade plan that's endured for a long time with the NQ. So this is the MNQ using the same chart, and let's just see. A lot of trading going on, but waiting till the market's open. So here's 8:30, and Like this green trade way back here is the one that's in sync. You have, that's canceled. A little bit complicated because there's a lot going on in here, so I don't even know how you take this. Let's turn off all the add-ons which complicate things. Just look at the trackable trades. It's usually the best way to start with counterpunch is turn off the add-ons. Show, where is it? Add-ons. That's too much. And so then you find the trade to track, which is the green one, and you could tell because of the stop going all the way across. And you can get in sync with the trade because it hasn't hit its target and it hasn't hit money management. The stop. So when it comes up at 8:30, you can grab it and get in sync. And then it comes up and there's your one and done right there. Trading to target 2, target 1, target 2, whatever. If you're trading micros, you could maybe do a few different contracts and take advantage of those targets. And the 610 tick kind of makes things a little more orderly versus a range bar when the prices are just flying around. And I believe there's a filter here. I'm trying to think it's the chop filter. You can see it down here. So that prevented that trade. But here's the next trade then. So this is trade number 2, literally. A lot of bars in there, right? 610 trades per bar. And by the time the setup comes, you're 4 minutes in. And another winner. So 2 winners in a row with the 610 tick. Just turning off all those extra add-on trades, focusing on the trackable trade, staying in sequence. I've got the trend mode indicator on here, but I do not believe it's activated. Maybe it's in hybrid mode. It's not. So it's really just meant as a visual cue. So it's not being used on this chart. That's another option. Is worth, if you want to test it and see if that helps you. So then you have a third trade, and that one is ultimately going to lose. And another here loses. This is a short, actually. But then a long that you can't even grab because by the time it becomes a real trade, the price has gone too far. So those first 2 trades are really the difference maker, but you got a nice one there. Another winner. Real accurate target, huh? Anyway, it's an alternative chart. You could see, you can literally turn off all the colors and just focus on the green trades only. That's another option with counterpunch. Green trades, you could do really well with just the green trades. So this is an interesting case because by the time, this sets up here, and this shows you the full Counterpunch Trader. This is not Counterpunch Express. Counterpunch Express is similar, but Counterpunch Trader has some filtering going on. And right here, which is interesting, is you're in the chop zone, which means you don't go long against the declining 50 moving average. But notice 3 bars later, the trade reappears right here because it comes out of the chop zone. And the strategy is smart enough to know that. And because it did not hit money management, didn't hit target 1, didn't stop out, the trade became valid. The strategy reprinted the same setup after it came out of the chop zone with the chance to get in with all these bars, and then boom. That's interesting. That's something the full Counterpunch Trader can do. You can do that with Counterpunch Express, but you have to kind of just do it in your head and know the rules and pay attention. But you could certainly use a chop filter as a concept, but obviously it's just you got to pay attention to all that. So I thought that might be an interesting chart to look at. Gives you something different to think about. And I think clearly you could see on a day like today, not only more tradable, but more profitable probably than the Renko. It just depends. I mean, the Renko could, like, you could hit the ball out of the park. Like, look at the trade that's happening now. If you can get in, and if you know which one to get in, that's the thing. Like, there's a lot of explosive moves. But like this one here, you're 4 seconds in and you're already up to here. How do you get in that? I just don't see it. Like, look at, see how fast that happened? That's the problem with the range bar in general. Renkos are range bars. I love range bars. I mean, that's my preferred chart to trade. Momentum bars. I like the Renko bars. But under different market conditions than what we're experiencing these days. I like to keep trading easy and make it as simple as possible, not complicated. And I think when you have a market, a bar, a chart that is so fast and so erratic, for me personally, I stay away from that stuff. I used to try to grab those. Sometimes you hit it, you get really lucky, and but you can't prove it. You can't get measurable results from your testing. I mean, I guess you can, but you have to drill down and look at the timestamps carefully and really imagine that you were stoic and capable enough to take those trades without mistakes. It's just hard, and it's harder than it has to be. So why subject yourself to stuff like that? That's my question. It's just a rhetorical question. But you could always fall back on a tick chart. You could always fall back on charts that we just know. I mean, this is a range bar, but soybeans not quite as affected by the erratic behavior of the stock market. I mean, this is just looks normal. And there's a whole lot of winners in there. One losing trade and it flips over, and then win. Just focus on what you could trade, what you could execute, what you could succeed on. Practice it, get really good at it. Build your UTA spreadsheet so you could build a log of trades and experience the good, the bad, the ugly, the great, over and over, and witness the equity curve go up and up and up. And then get your 25 in a row without a mistake. Make sure you could do it. Then you're going to realize with the Renko, you probably can't. Well, that should tell you something. Focus on what you can do. If you guys wouldn't mind hitting the like button for me, I'd appreciate it. Again, I see a bunch of people have come in, people coming, people going. Say hello, let me know who you are, that you're in here. I don't like feeling like I'm talking to an empty room and I'm just making up stuff, thinking you want to hear this, you want to hear that, and you really want to focus on something different. So feel free to interact. Hey, good morning to you, Steve. All right, so pretty quiet in here. I've kind of said my piece. I'm going to put a last call for Trade-A-Haul. Last call for questions, guys. Let me know if there's anything on your mind, anything you want me to talk about, show you, review, go over. Hey, Pamela. Nice comment. Yeah, I mean, we use the tick charts for so many years. Have you ever gone to momentum or range bars? I could tell that obviously the rank go way too fast, at least during these days. And the tick charts, they've got their virtues or things about them I don't like as much as range bars. I mean, under, comparing apples to apples under normal market conditions, I like the momentum bars because I think they're more price action specific. But the tick charts definitely slow things down, and you could use the tick counter. Like, I don't have enough space on the right edge of this chart here to see it, but this is a really great tool. If you're not familiar with tick charts, let me just give a little more space here on the right side. And this is one of the benefits of a tick chart, is that you could count it down. Like, this is a 610, which is a 610 is a Fibonacci number, right? So every 610 trades, and this is still going really fast, but you could see the tick counter counting down and the percentage going up. And then you know when the bar is going to close and the next one's going to open, so you could anticipate better. And also, this is actually a super effective chart. I mean, look, you could just see the winners after winners after winners with counterpunch. And this is a really good chart. We've known this for a long time, the 610 tick with the NQ. And of course, this is the MNQ, the micro. Now, you could slow it down further. The next fib number, does anyone know what it is? I could tell you, but I'm going to make you put your thinking caps on. Anyone know what the next fib number is after 610? I like the fib numbers. You don't have to use fib numbers. You can use any number. But let's put the next fib number in there and look at a slower chart. I'll give you guys half a second to wake that sleepy, foggy brain of yours up and tell me what the next fib number is. Anybody? You guys should have a cheat sheet that tells you the fib numbers, so you can just open your cheat sheet and see it right there. So the way you figure out the next fib is you take this one and you add it to the prior one. So 610 plus the prior one. The prior one's 377. You add those two numbers together, and that gives you the next fib number. You guys know that? So 987, I think that's it. I could be wrong. I'm doing the math in my head. No, it is. So the next one slows the chart down even more. It looks pretty good too. I don't know if it looks as good. Obviously, it's got a couple winners right there in a row. But you can see it's much slower. That's the point. And you could find slower charts. And these will give you bigger trades mostly too. Like, you could go slower. But I don't know if this is going to be as good as the 610 tick, which we have a lot of history on and know that's worked with the NQ for many years. The 987 might work. But it definitely gives you options. This one looks messier. 610 looks better than this, although there are definitely some nice moves in this chart. But I still think I like the 610 more just by the first look, but that doesn't mean over a period of 100 sessions the 987 might end up being better. But it's just, I'm just giving you alternatives. But you can see it doesn't move nearly as fast because it takes more trades to close a bar. Still going pretty fast though. I mean, we're up to almost 700,000 contracts already on the micro. How does this look on the full size contract? Notice the volume at 689,000 on the micro. A lot of people trading it. Super erratic. At 50 cents a tick. So here's the full size contract, and there's only 281,000. So a slower moving market. Not as crazy, not as many bars. This is still the 987. And getting in sync with that first trade I pointed out would have also been a winner. It got to a perfect target 1 anyway. Let's go back to the 610 now with this NQ. Yeah, okay, I'll look at that one, Pamela. 377 is an excellent tick chart for the Russell. Totally agree. We'll look at that one next. I have to copy a different chart for that. I'll copy the crude oil chart because that's a tenth of a tick, a tenth. It's a tick chart, whereas this is a quarter point tick like soybeans. But oops, I meant to make this a 610. Oh, I meant to keep it at NQ actually. Make it a 610 again. Yeah, so the 610 on the full contract NQ did really well. You can see there's a couple losses in there, but there's a whole lot of winners. Definitely a chance to quit positive. And again, a much slower chart. $20 $20 a point, $5 a tick with the full size, and not nearly as erratic as the crazy micro. The micro's crazy. And I would guess that, you know what, you probably put a custom Renko chart with Catapult on the NQ instead of the MNQ, and maybe it's a lot more tradable. So that's something worth looking at. So if you really love those Renkos, just got to choose something tradable. So let's go ahead and let me find that 377 tick crude oil chart. Here it is. I'm going to copy and paste it. Counterpunch is just so versatile. You don't have to do much to it. I'm just going to copy and paste this crude oil trade plan and change the symbol. That's all you need to do. So you want to look at the Russell or the micro Russell? We'll look at both. M2K, M22. 377 tick. Well, it's an ugly looking chart, that's for sure. Notice this micro is already up to 90,000. I mean, for the Russell, that's a lot. It's certainly not the 300,000 we saw, or the 600. What was it? How many hundreds of thousands? 700,000 almost on the micro NQ, but that's still a good amount. But like, this is the whole session so far on the micro Russell. On the micro NQ, you got windows and windows and windows of bars. I don't know. I'm not so crazy about how this looks. There's too many wicks, and maybe just looking at green. Anyway, it was, it got to target 1 here on the first trade. And then that's canceled. No setup. That's no setup. It did get short, but then it flipped to long, and then yeah, it gets pretty choppy in here. But the regular Russell is only $50 a point, right? $5 a tick, $50 a point. And let's look at the difference. So that's the micro Russell versus RTY, just the regular contract. Kind of looks the same. Yeah, pretty ugly looking chart actually. Today the Russell did not look very friendly. Yeah. One thing about the Russell is to consider starting this either 15 minutes after the market's open or 30 minutes after the market's open, and test for that. So, and also I got a lot of add-ons in here, and I really think that muddies things up. We do use that on crude oil for specific reasons, but I'm guessing when you're learning anyway, turn off the add-ons. It's confusing. You make a much cleaner chart and find the trackable trades. So it didn't start well, though. Definitely didn't start well. So if you wait your 15 minutes, so here's waiting 15 minutes in, right? So you avoid the early morning. This is your pregnant snake expanding range, the kind of pattern that's going to kill you every time. When it breaks out up and breaks out down and then trades back into the middle, right? I call that the pregnant snake, or the snake that just ate a warthog, whatever, right? You don't want to be snake food. So you wait your 15 minutes, and then your first trade gets to target 1 and has a partial winner, and then your second trade is a big winner. And if you're waiting 30 minutes and then starting, then here's 9 o'clock, and you're able to get in sync with this trade and another big winner. But you could still kind of see that pregnant snake pattern kind of. Luckily, it didn't affect the outcome of this trade, but when you see a lot of expanding range and these like funnel type of patterns, they could be dangerous, but they could also resolve. They resolve in a really big way at some point. In this case, luckily it didn't come up high enough to get, past that ascending trend line. And that set up a pretty strong move down. A perfect target 3. Look how perfect that is. So even though the chart looks horrible, you can mitigate it a little bit. Wait that 15 minutes or 30 minutes, and that's something you could test for. Like, you can go back and fast test a chart like this really easy and see how many sessions you can win with 1 or 2 trades, winning result, on to the next session, and you could fast test your 8:45 Central Time start time and your 9 a.m. start time. Fast test them both, chicken scratch counting. 1, 2, 3, 4, cross. 1, 2, 3, 4, cross. Start a win column, loss column, break even column. Test the last 100 sessions. You could probably do it in an hour. And you could see if you could quit with a positive result in the 70+% of the time range, closer to 80%, maybe with some break evens, but losing less than 20% of your sessions in the end. when you add up your break-evens and your winning sessions with minimal trading, you could quickly see if this idea is good or not. But that's a way to get through charts and get through trading ideas and decide if it's worth your time, and you're starting to prove it to yourself by seeing that if you just minimize your trade to a simple set of rules, you could quit with that positive result most of the time. That's how you make money as a trader. Once you find something like that, I would then say dedicate your time to your UTA spreadsheet and build that log of trades, trade by trade. It won't take you long. It'll be worth the effort. And that's how you would know if a chart like this is going to make you money with the right start time and the right approach. And Pam's right. You could use the micro for scaling. Micro has more volume than the full contract. It's interesting. More people going to the micro. The percentage, though, as far as the commission versus the size of the trade, not as favorable with the micro. You're paying a higher percentage when you figure they don't cut the commission 10 times down like the dollar per point on the micro. So you're paying a higher percentage of commission per the value of the tick or the point. It's a factor, especially with multiple positions. Something to think about. All right, everyone. Well, I hope you enjoyed the session. I think we're pretty much done, unless there's any other questions I need to address. I want to thank you guys for spending your time with me this morning. I will see you on Wednesday. I forget John's schedule. Just check and see if we've got sessions scheduled or not. I know he has some traveling this month. I can't remember if it's this week or next week. Sure thing, Pamela. Everyone have a wonderful day, and I'll see you next time.